going on, everyone? Alright, we're going to do the weekly outlook for October 21st and for the rest of this week. There's a big earnings week coming up. Well, maybe not so big. We have Boeing and Tesla coming up. Let me pull that up. Uh, Alright, Boeing and Tesla are probably the only two that are of note. Boeing before open, Tesla after close. Boeing's not that much of an impact on the global market, but Tesla obviously is, with it being a part of the NASDAQ and the S&P. It's a very big contributor in that regards. But let's jump into the charts and take a look at the NASDAQ first. So, as always, we start off on the weekly chart and try to identify that drawn liquidity, right? We take a look at some of these recent swing highs or swing lows. So, first, I want to note that there is this weekly supply zone right here, right? We have this rally base drop, and then we broke down this weekly external range liquidity. We actually formed a very large wick to the downside, which is very bullish. So this is really treated as a large weekly demand zone. But in this drop, right, we create this small weekly fair value gap, which is bearish. But obviously, if we look here at 20,555, we actually closed above it, so it negated that bearish fair value gap. You can even see from some of this price action order flow, right? After this demand zone is formed, we create a very large bullish fair value gap. We retraced back into the demand zone, and then we push back up into this imbalance of that weekly fair value gap. This is actually a pretty clear sign as to why I don't like trading order blocks as much as identifying supply and demand zones. Maybe order blocks are good for certain levels when you're doing day trades on like smaller time frames, whether it be 15-minute, 5-minute, 1 minute, right? But when you look at this giant order block, if you were to treat this as one, right, you're looking at the top of the wick to the bottom. We definitely went completely through it. You could have gotten faked out when we inverted this fair value gap when we closed below it, but looking at this accumulation at this demand zone, this is a telltale sign that we respected the buyer stepped in and we pushed price back up to take out this weekly external range liquidity as well as this weekly fair value gap. I have all my drawings hidden right now just so it's a little bit more clear to take a look at some of these levels, but now let me turn them back on so we can dive deeper. Right, here's that weekly supply zone that I mentioned. And so with time frame alignment, we are going from a weekly to 4-hour. So let me jump to 4-hour. This was that the buyer stepping in. That actually is right here, right? This is when we created the large demand zone. And now that we are at 4-hour, we want to identify what our nearest draws and liquidity are, right? So zooming in, we have a supply zone created on the 4-hour as well. We went into it on October 17th, rejected it, came back down, went to a demand zone, and really we've been in this very tight consolidation range. Right, even if we looked at the daily chart, right, you can see all these candles are fairly small in this very tight range. So we're in this consolidation period, but still, if we're looking at the price action back on the weekly, right, our drawn liquidity is probably higher. It's probably this supply zone, right? And especially since we've negated all these bearish fair value gaps thus far. And even when we're looking at the daily chart, the past couple of days, right, we've been closing higher and higher. We are at 7:52 p.m. right now on Eastern Time. So that means the futures market did open and we are pushing up slightly. So let me just go back to 4-hour. So our immediate drawn liquidity, right, is we have this the fair value gap. It's a bearish fair value gap. We also have this weekly external range liquidity that's actually quite old, but we still put that there as a level. But really, this 4-hour supply zone is what we're really targeting as the near term, and then a little bit further out, right? We're targeting that weekly supply zone up here, all the way at 2750. So now we were trying to come up with a more of a detailed plan as to how we're going to approach the market this week. So we want to take a look at this 4-hour external liquidity as our draw-in liquidity. How do we find an entry, right? We have all these candles moving forward. We have no moving up. There are no bullish fair value gaps on the way up, but at the same time, there were no fair value gaps created on the way down from rejection either, right? So 4-hour. So let's take a look at a smaller time frame. So from weekly to 4-hour, our next time frame alignment really goes to our 15-minute. So on 15-minute, we have some demand down here at 2461, which it got respected. You can see 1, 2. This is one of the examples where I actually did draw an order block, right? You can see the extents, this top wick and bottom wick. I did draw this. But you see how deep price goes down into these order blocks. We're looking at from 472 all the way down to 452. That's a 20-point move. That's kind of a, if you're in the trade at the top of the order block, right, 20 points down, that's quite a bit of a drawdown if you're entering a trade for a stop loss. So now we are consolidating still. We're on the 15-minute, right? After that gap up, we are still consolidating in this Asia session. But still, my draw liquidity is up high at the that supply zone. So in order to get any kind of move up, the near-term liquidity would probably be this trend line that we see, right? Even though we can use time and levels as analysis for your draws on liquidity, a lot of retail traders will be putting their stop losses below certain trend lines, right? So I use trend lines and also daily EMA. So this green line right here is our daily 9 EMA. So one of the things that I would like to see if I wanted to go long, after this accumulation phase, this is all Friday movement, even for Asia and London, if we were to consolidate in this entire range for overnight, and we can sweep liquidity by breaking this trend line back into this order block or even this demand zone down here, or even tapping the daily 9 EMA and getting a sharp push back up to show displacement back up, which will show manipulation below recent lows, right? And create new fair value gaps. So if I were to see perhaps a new fair value gap in this area, if we sweep any kind of lows down here, bounce down, and create a fair value gap, that would be a bullish sign that shows manipulation that would be able to target these external range liquidities on the 4-hour. So now that we have that as a somewhat of a thesis, right, of what we're seeing so far, let's take a look at ES to see how it compares. There's a big component for when we're analyzing both markets, right, is to see if there's any divergences, and that divergence is taken in the form of SMT. And even if we go back for both ES and NQ, right, you can see that we're on the buy side of the curve if we're talking about the market makers X model. So in this case, we're in a market maker buy model, right? We have some sort of starting liquidity pool up here, which is our 4-hour external range liquidity, and we created some consolidation periods. Although it's very choppy on the way down, right? We got down here, we displaced down, which was actually really manipulation into the demand zone, and we went back up to above the London levels. So this was all from Friday action, right? So same thing over here on Friday, right? I mapped out this liquidity level that we broke down and went back up and create a market structure shift that was bullish, right? We broke down this lower high and we created a new higher high here, new higher low here. So we we are in fact in an uptrend, right? So after we have identified that we are on the buy side of the curve, right, that gives us a little bit more confidence that our target really is that 4-hour external range liquidity all the way up here. And now let's take a look at some of these higher time frames on ES to see if we have some sort of divergence. So let me go back to weekly. You can see that we have very strong divergence between ES and NQ on a weekly, daily, some of these higher time frames, because we have been consistently making new all-time highs on ES, but we have not done so on NQ. Right, so until NQ breaks above the that previous all-time high, that's going to make me a little bit cautious as to how far is NQ going to rally if we're actually going to make new all-time highs. If we are, then I would expect to see a lot more continuation, right? But until then, I'm a little bit cautious because of again, of this weekly supply zone and that fact that we have divergences up here at the top. Down low, we don't really have much. We have a little bit. We can see this recent, not really recent, but this low is a little bit lower than this low right here. So we have some SMT divergence at the lows, right? Actually, this one's lower than this one, but the reverse is true for ES. So now we go down to our daily, and this daily time frame is not your normal time frame alignment. If you're trying to take a look, let me actually hide the drawings. If you're trying to compare the two, right? But this is just to kind of gauge where we're seeing any kind of divergences or any other clues that we might possibly see. So nothing really on the daily. I do see this demand zone right here, base rally right here on ES. So that's something to keep an eye out on the future. Now 4-hour. 4-hour is actually pretty interesting, right, on ES. Because what we have here is that we had this old all-time high. We broke above, but could not close above it, showing manipulation. We came back down. We filled this fair value gap. We actually broke that, but we kept making. We are still in an uptrend, right? So because we manipulated this previous all-time high, and then we did not displace back down, that shows that we are still bullish, or at least neutral. So if I were to unhide these drawings, we can see. Let's just focus on ES. Right, very clear. Broke the previous all-time high, did not displace back down, and we slowly grinded back down. But now we're slowly grinding back up. So that's why the strong liquidity is still higher, right? To me, if we can break this previous all-time high, definitely we're going to be looking at that next, the most recent all-time high of 59.27. Right, so we have a bullish sentiment on ES, and same thing to be said on NQ, where, you know, NQ we had displacement here, but this was mitigated already, right? We haven't had any new strong bearish fair value gaps thus far, so now we're just grinding slowly up. So really, on both future indexes, right, I'm really looking at any kind of smaller time frame draw on liquidity, so that smaller time frame sweeps of liquidity, whether it be that trend line or some sort of sell off into some of these demand zones before we can have a good risk reward entry for longs targeting this higher 4-hour external range liquidity on both ES and NQ. So that's pretty much it, guys. I'm going to post this analysis in Discord. If you're not in the Discord, I will post a link in the description below. As always, make sure you're keeping your risk rewards mindful, keep it safe, and good luck this week. Peace out, y'all.